Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 14th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're trying to give you some color as to what I'm doing, and in the meantime, teach you some different strategies that you can implement into your own portfolios. But please do that in your own way. The reason why we can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. All right, having that out of the way, let's get this on. Not a lot of economic data coming out today. We have had a lot of talk about the FOMC meeting on Wednesday, the results of that meeting. And I think what we're seeing here in the NASDAQ is a lot of risk being taken off of the table right now. So the last few days heading into this event, people are taking some money off the table and getting a little bit more neutral. And that is similar to what I've been doing as well. As you can tell here, the E-mini S&Ps are off just a couple of ticks here, down 1 point or so. Got a lot to go over, so let's get on to the trades that I've done. These are some trades that I've taken off. And Apple, before I went on this round table, I was trying to put it on at about $1 or take it off for $1.75 credit. But I went on this round table for timingresearch.com and went online, was a live round table with 4 other traders, and we were talking about everything from oil to the dollar and some of these individual equities, what we thought was going to happen this week with the FOMC and where we thought the market was going to be at the end of the week. So go and check that out, get that sent to you. That was a really good one, and it's great to hear from some of these other talking heads in the industry as to what they're thinking, because I don't want to just get kind of stuck in what I'm thinking. But I was trying to get out of this, left a working order in there and never got filled because Apple just kept rallying. But I pulled the trigger and just got out, pulled the ripcord on this right before I went on this daily market commentary just to get out of it. I had on the January 110-105 put spread, and I originally did a debit of $1.15, sold it out for $1.31. Obviously, I wanted to get out for that $1.75, but just didn't happen. It was just rallying too fast for me to catch up with it before I had to walk away. But a lot of these you're going to notice were my debit spreads that I'm taking off, because we're seeing a lot of implied volatility go up. So when you're doing a debit spread, I did these in really low IV environments. Now that I've seen that implied volatility go up, I'm looking to cover a lot of these. And it may not have been in line with what I was looking for my profit potential, but after this FOMC meeting results, I think we're really going to see this volatility come off, because it's kind of like when those earnings have the implied volatility ramp up before that binary event. This is another type of binary event where after the results come out, the overall market's going to take a deep breath and exhale, and we're going to see some of that volatility crush happen. So I don't want to see that happen to these trades that I have been making money on. So Apple, I covered that for a small profit. IBM, again, another trade that I had on as a debit spread. I had on the January 135-130 put spread, and I originally paid a debit of 85 cents for that, sold it out for $1.57 this morning. Probably could have waited. That was the first trade I really did this morning, and it did go down a little bit lower. I probably could have gotten a few more pennies out of it, but that is what it is. The triple Qs I covered this morning also when it came down and touched this 110 area and got out of that one. As you can see, implied volatility's gone up since I put that trade on. I had on the January 110-107 put spread. I have had this one on for quite some time, and originally paid 56 cents for it, sold it out for 96 cents. So that was a nice little profit. Oh, the other caveat to why I'm covering some of these trades also is I'm starting to get into that zone where we're going to see a lot of theta decay start happening in these trades. And for a debit spread, that is not a good thing. I'm going to have that volatility to continue to go higher and outpace that theta decay. So I'm trying to get out of these trades before we get into that real theta contraction that we usually normally see here. And I don't want to see that theta contraction happen with volatility contraction, because I can be directionally right and still not make money. With the Johnson & Johnson here, I had on the January 105 100 put spread, and originally paid a debit of $1.93 for that, sold it out for $2.55. Again, as you can see, since I put that trade on, we've had volatility expand, and I don't want to see the volatility contract on that. So and it's about as high as it would be on any earnings announcement. So that is a good time to get out of something like that. Lululemon, this is a trade that I actually just put on today, and you could probably get it a little bit better. I did it before I went on that webinar, and it's continued to rally a little bit more. So you could probably get this for about 10 cents better, if nothing else. But this is what I was looking at as going to be a resistance area, as it has acted as a nice support several other times. So I think that we've seen this come off. Remember, I talked about this. This was the movement for a buyout opportunity, people talking about Under Armour and things of that nature. And now that the rumors of Under Armour and Nike buying out Under Armour are over, it doesn't look like that's going to happen anytime soon. We're kind of seeing this bit of a bounce after this sell-off, so this looked like a pretty good time to sell a credit spread and collect some premium. And so I did the January 55 call spread and sold it for $1.05. I think you can get that probably about for $1.15, if not better, right now. So just because we're up there near the highs. That's about all I got for you guys today in a nutshell. Friday's webinar, we're going to continue this several-part series on replacing stop orders with options contracts. Last week we did it on puts. That was a really good one. Now we're going to expand on that, buying a put, and we're going to try and finance it by selling a call. And what that is called is a collar. So we're going to take something out of our core portfolio, create a strategy around it, and it's called a collar. So we'll not have to pay as much for that insurance on our puts. So to the downside. All right, so go to protraderstrategies.com and check that out. And you can also check out the roundtable discussion that I did with several other traders, or you can go to timingresearch.com and get that sent to you. That's all I got for you guys today, other than if you can't take that, take it easy.